Welcome to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai. A slightly later start than usual today, but of course we are going to bring you the instant reaction to former President Trump's speech at the RNC, his official acceptance of the nomination, one of the longest speeches in modern history to occur at one of these conventions. So we will talk about what this means from a policy perspective, but first, this is what your markets are doing today. S&P futures, NASDAQ both pointed to open up in the green. We have been talking about that rotation that's been going on as of late out of tech into some of the small cap stocks. But for now, what you can see is green on the board for equities. 10-year yields, we are trading sideways. 4.20 is where we're at one point during the speech. We traded about 2 to 3 basis points higher. Remember, the talk of protectionism could be inflationary for the U.S. economy, and therefore we did see some pressure build up in the yield curve, and that is one of the reasons why the yield curve has been steepening. Brent also in focus. Look at the reaction in oil. $84, just shy of 85 here, down about 0.5%. And that is why several times in the speech, President Trump talked about drill, baby, drill. They want to open up the production even more so than it is in the U.S. And that is obviously going to put downward pressure on these oil markets at a time when OPEC has been trying to stabilize those markets by withholding production from the general market. So a big story, of course, that we're following. But let us just recap some of the highlights from that speech. Our top story this morning, former U.S. President Donald Trump has officially accepted the GOP nomination for the November election after surviving a failed assassination attempt. He spoke at length about how he survived the attempt on his life, imploring unity and vowed to be a leader for every American. Then he laid out his plan for his return to the White House.
That means two things in day one, right? Drill, baby, drill, and close our borders.
Let's bring in Patrick Schoettmer, Associate Professor of Political Science at Seattle University. Good evening to you, Patrick. Very long speech, hence the slight delay in the start of our show. But let's just start off with the messaging that has come out of Trump's speech, because he started off appealing to all Americans, saying that he wants to heal the divide in society. He doesn't want to just be a president for half of the country. He wants to be the president for all of the country. But then later on in the speech, he resorted to name-calling. He accused the Democrats of weaponizing the justice system. Did this message of unity actually come through and come across?
I think if people were tuned in maybe for the first 5 or 10 minutes, they might have heard Trump that they weren't expecting to see. Republicans were really concerned that Trump historically has been accused of having a lack of discipline when it comes to these sorts of events. And they were worried that he was going to slip back into old rhetoric that he was comfortable with. And we saw that as the speech went longer and longer, he fell back more and more on old tropes and stories that he's comfortable and familiar with.
Did you walk away from the speech feeling like you have a better understanding of what Trump 2.0's policy priorities are going to be?
I don't think that Trump effectively conveyed any change in policy from where he had previously stood. If people were tuning in, looking for a new direction, I don't think they would have walked away hearing one. Most of the policy stuff came in towards the end. So especially given that a lot of the important races are going to be on East Coast time, it was probably getting to like 11:30 or closer to midnight before they were hearing a lot of the policy that they might have been coming to look for. And it was mixed in with a lot of anecdotes and stories that he usually uses as rallies. So it might have been hard for people who were not familiar with Trump's speaking style or not familiar with the arguments that he usually makes to follow or find the particular issues that they really cared about.
It's funny because one of the takeaways from that speech, and it's a consistent theme every time Trump delivers one of these speeches, he seems to suggest that the United States has gone too soft on its allies and too hard on its enemies. From a foreign policy perspective, how do you think the Western world is viewing a speech like this?
Well, I think this speech sort of reinforces a lot of the fears that Western allies already had about Trump, and the selection of J.D. Vance as his vice presidential nominee only further amplifies and reinforces those concerns. So I think if we had people say Western European allies, for example, or Australian allies looking for reassurance, they probably did not find any at this convention.
Do you think that President Trump has this in the bag? If you look at betting markets, they're certainly suggesting, 70% probability or something thereabouts of President Trump winning the elections come November. To your mind, do you think that it is a pretty much done deal at this point, or do the Democrats still have a fighting chance?
Democrats definitely still have a fighting chance. Given the nature of the Electoral College, the race is going to come down to a few key states. And even with the disastrous performance by President Biden in the June debate, we only saw him fall a few points behind in key states like Pennsylvania and Michigan and Wisconsin. A lot of what Americans are going to do is already baked in, and a lot of people who were supporting Trump because they like Trump, and a lot of people who came in supporting Biden were supporting Biden because they didn't like Trump. So a lot of that was baked in, and I don't think we really saw anything from either party that would disturb that basic balance. I'd say Trump is probably at a little bit of an advantage right now, but it's still anyone's ballgame.
Yeah, I guess my question is, who is actually going to be the Democrat candidate running against President Trump? The walls seem to be closing in on President Biden. Even there were reports yesterday, Washington Post suggesting that even Obama is saying that the numbers are not looking good for President Biden versus President Trump. Do you expect him to stand down? And if so, when do you expect it to happen?
It's hard to say at this point. He has a reputation for being stubborn, and when people push against him, he tends to push back harder. When it comes to him leaving the stage, ultimately he's the one holding the cards because he has the vast majority of delegates, and there's no way to force him out without blowing up the party. So it's entirely a persuasion effort. Some media accounts are saying that the pressure is beginning to move him or soften his resolve to stay in the race. But until we see a signal that he's actually willing to buckle under, it's hard to say that he's definitively going to stand down. But it is growing increasingly difficult as allies come out and more publicly state, like Adam Schiff, the Democratic Syndicated candidate for California, calling for him to step down. As this volume increases, it's going to get harder and harder for him to stay in.
Yeah, it certainly does appear to be the case if you look at all the reporting that's come through. Final question to you. What do you think happens in a Kamala Harris-Trump showdown come November?
Well, the issue any new candidate is going to come into facing Trump is that they're going to have about 100 days, 90 days to define themselves. Kamala Harris has a broader public profile than any of the other potential Democratic replacements, but there's still a lot of Americans for whom that she's a fairly blank slate. And so there would be an immediate race between Democrats on one hand and Republicans on the other to define her in the minds of the public. Given that opportunity, it's going to really depend on messaging and what issues they can center. The hope Democrats have is that if they put forward a Kamala Harris, that they'll be able to recenter the race around Trump's legal problems, given her background as a prosecutor, the findings that he was liable for rape, for example,
right,
as well as on high salience issues like abortion. Whereas Republicans are hoping to focus on her relative unpopularity.
Yeah. Patrick, going to leave it there. Thank you so much for staying up so late for us. Patrick Schoettmer, Associate Professor of Political Science at Seattle University. Thank you. Also coming up, Israel is believed to be considering transferring control of the Rafah crossing to the European Union and Palestinians. We have the latest on the Israel-Hamas war next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Donald Trump formally accepts the Republican presidential nomination. In his first public speech days after an assassination attempt, he calls for unity, tax cuts, and an end to foreign wars, as well as blaming Democrats for inflation and the border.
That means two things in day one, right? Drill, baby, drill, and close our borders.
Bloomberg understands Israeli officials are considering whether to transfer control of Gaza's Rafah border crossing to the EU and to Palestinians. Plus, South African President Cyril Ramaphosa announces infrastructure plans in a bid to recharge economic growth. We're live in Johannesburg with details of his first major policy speech since the election in May. Well, it's just gone 8:30 a.m. across the Emirates, everybody. I'm Jumana Bersachi in Dubai. A short while ago, we did hear from former President Trump accepting the official nomination to be the Republican candidate into the November elections. We are keeping a close eye on how markets have tracked that speech. It was a very long speech, the longest actually ever in modern history to occur at one of these conventions. But you can see from behind me, despite the negative handover from Wall Street, we have both of these futures for both the S&P and the Nasdaq pointing towards a green session ahead, so up about 0.1%, 0.3%, tracking also the price action in 10-year yields. At one point, we were about 2 to 3 basis points higher. Again, what investors are beginning to position for is an inflationary policy, a protectionist policy, longer-term fiscal profligacy, which is why we've talked about that steepening occurring in the U.S. yield curve. But today, we have 10-year yields still pinned around that 4.2%. And then oil down about 0.5% on the back foot today. Drill, baby, drill was one of the messages that came through from that speech over the course of 80 minutes. And President Trump mentioned it several times. It's a big focus of his for the U.S. to be energy independent and to achieve energy security. And so what we are seeing some downward pressure on oil this morning as well. What about the USD? Well, this is the price action for the USD this morning. A little bit of strength coming through. And what's interesting about the price action USD is the market can't seem to decide whether Trump's policies will be positive for the USD or negative, because you will recall that Trump gave a speech to Bloomberg Business Week, an interview to Bloomberg Business Week earlier this week, and whereby he said he is not happy with the strength of the USD. That put downward pressure on the currency. And as you can see from the options markets, we are beginning to see a pickup in risk reversals. Investors are looking for downside protection in the USD to prepare for the possibility of a Trump presidency. But let's also check in on how Asian markets are trading. Avril Hong is in Singapore. And Avril, of course, a lot of focus on U.S. politics, but then we also had the communique from that China plenum.
Yeah, we were watching Trump's speech very closely. Perhaps what was interesting was how tame Trump is compared to what we're used to in relation to those comments on China. If anything, we saw the offshore yuan actually pairing some of the weakness as he spoke. But as you say, there was that readout from the third plenum, and it was very vague and nothing in the way of helping to boost investor confidence. But we are seeing the CSI 300 still in the green. Maybe the national team at work here. Asia stocks really negative. Those economic condition concerns taking hold despite some optimism about those Fed rate cuts. Of course, it's about the U.S. chip restrictions as well, and that's why you're seeing the likes of TSMC failing to rebound despite knocking things out of the park with its earnings just a day ago, Jumana.
Yeah, of course. We can't forget about all of the tech stories that have been swirling around as well. Avril Hong, thank you so much for the latest. Now, over in the Middle East, Israeli officials are considering transferring control of Gaza's Rafah border crossing to the European Union and Palestinians. Sources tell Bloomberg officials that they are in talks with the U.S. and EU about the proposal, which, if enacted, could foreshadow an end to the Israeli-Hamas conflict. Let's bring in Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. So this is an interesting story that has emerged, and people are saying that it may lay the groundwork to a potential ceasefire. What do we know?
I mean, I think it's in some respects going to be the other way around. I cannot see a scenario where Israel gives up control of Rafah until there's some sort of settlement in Gaza. It's also true to say that Netanyahu was in the area not that long ago and said very explicitly that this is not going to happen. However, things have evolved. There is precedent for this. They were there before in 2007 and before Hamas took over. So it is possible, but can you see a scenario where Israel cedes control of a critical border point like that? Does it fundamentally trust anyone to protect Israel by controlling that border? And that's going to be very hard to see. The landscape has completely changed.
Yeah, I mean, from Netanyahu's perspective, I think he's been adamant in the past that he does not want the border crossing to fall under control of Hamas once again. What would engender him to change his view on this? What would bring him around to accepting that the EU and some Palestinian officials, unknown who at this point, could take control of that crossing once more?
I think it would have to be part of a grand bargain.
Right.
So in other words, it's one of a number of elements that, again, give, whether it's Netanyahu or whoever his successor is, the comfort to be able to go to the Israeli electorate and say, you can trust this setup. Now, you can imagine just how many conditions are going to have to be in place, how many checks and balances, particularly around the issue of who is actually in charge within Gaza proper. And that's really up in the air at the moment.
Yeah, okay. Well, a story we're monitoring closely. Stuart, thank you very much for joining us this morning. Stuart Livingstone-Wallace, thank you. Moving on to Europe now, ECB President Christine Lagarde spoke about risks to growth after the central bank kept rates on hold yesterday.
The risks to economic growth are tilted to the downside. A weaker world economy or an escalation in trade tensions between major economies would weigh on euro area growth.
All right, let's bring in Janet Mui, head of market analysis at RBC Brewin Dolphin. Janet, so much to talk about this morning. Maybe let's just start with the ECB because that was the big central bank decision that came out yesterday. To be honest, she didn't say much, and the fact that she didn't say much means people are thinking that September is not a done deal as far as the ECB are concerned. Why do you think they're being so cautious?
Hi, good morning, Jemana. Thanks for having me. Well, I think primarily it's because services inflation and wage growth is still pretty stubborn. So I don't think they can pre-commit to any particular meeting that they would ease. So I think September is on the table because they will release their macroeconomic projections. And I think if things continue to move in the right direction, then that would give them the ability to cut. But I think it is very hard to say. I do think that the economic situation is balanced. I mean, on one side, you have, say, manufacturing PMI, which is still pretty weak. And as Christine Lagarde was mentioning, growth risks are to the downside because there's just so much uncertainty. But at the same time, the labor market is still pretty tight and unemployment rate is at record low there. So I think it is a tricky situation.
I've been reading a lot of analyst reports suggesting that a return of Trump to the White House would actually be quite bad for European growth, not least because he is taking a more combative line against some of the European allies, has talked about imposing further tariffs, 10% tariffs to hit some of those key industries. You talk about car makers within Europe as well. To what extent do you think a return of Trump to the White House could pose downside risk to European growth?
I think from a trade protectionist perspective, that would pose downside risk because the euro area, particularly Germany, runs a trade surplus. So that obviously will make it more vulnerable to higher tariffs when the US is running a trade deficit instead. And also, I think it's not just the issue of trade protectionism. I think it's generally the exposure of Europe to China. I think the Chinese economy is slowing already, and that's impacted the stocks of luxury companies, for example, quite notably in recent months. And I think if trade protectionism increase under Trump, and China is very likely to take a hit, which will indirectly also affect Europe by demand.
What does a protectionist Trump mean for the US dollar? And here I find the price action quite interesting, and also combined with Trump's rhetoric, it's unclear what a return of Trump to the White House would actually mean for the USD. Trump doesn't like a stronger USD, but perhaps more protectionism is actually bullish for the greenback.
Yeah, I think that's the thing. I think it's ambiguous. It's very difficult to say because you have both supportive and dragging factors, right? So I think if the budget situation worsens, that obviously is bad for the dollar. But at the same time, if trade protectionism actually improves the trade deficit, then it could be mildly positive. And I think if the Fed were to hold rates higher for longer under a more inflationary scenario, then that could be supportive for the dollar. But at the same time, if there's so much concern on geopolitics, then dollar tends to be the safe haven. So I wouldn't have a very conclusive answer for you at the moment, I'm afraid.
Yeah, well, it's tricky. I mean, no one seems to have a conclusive answer on what should happen to the U.S. dollar moving ahead. But how about we trace it back to what you think the Fed is going to do? The market is pretty much taking it as a certainty that they're going to start the rate cutting cycle in September. July would probably be a little bit too soon. How far do you think they go once they start the rate cutting cycle? Because it's not just about the first 25 basis points, but what they do afterwards.
I think if the economic situation right now continues, which is a bit of slowing growth, but nothing too major, inflation heading in the right direction, I think they won't be able to cut by a lot. I think potentially 1 to 2 later this year, and potentially 3 up to 4 next year. Once cut per quarter, that kind of pace for next year. But it is highly uncertain. We have to look at the economic backdrop. But I think the key thesis is that if Trump is elected, that's a bit inflationary. And if we don't have a recession, why do you have to cut so much?
Yeah, and that, again, is another big question as well. So probably once they do start, they'll go cautiously, which is the signaling that we're getting from all central banks around the world. Janet, so good to chat to you. Thank you very much for coming on our show today. Janet Mui, Head of Market Analysis at RBC Brewin Dolphin. Also coming up, our next guest says there is more scope to trade between Asia and the Middle East than just oil. We look at the emerging economic corridor linking some of the world's fastest growing regions. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, there is some $47 billion in untapped trade between Southeast Asia and the Middle East, according to our next guest. Simon Williams, CEEMEA chief economist at HSBC, also says connectivity between Asia and the Middle East is set to soar in coming years, expanding well beyond energy trade. I'm pleased to say that Simon joins me now. Really interesting report that HSBC and you co-authored about these upcoming trade corridors between the Middle East and further towards Asia, Southeast Asia as well. What is the crux of your thesis? Because you seem quite bullish on the potential. We are pretty bullish. It's something we write about a lot because it's an economic relationship which is so critical to the Middle East, but also to Asia. Bilateral trade, probably worth about $950, almost $1 trillion. I'd have thought over the course of this year. That's about 40% up on its pre-COVID highs, and it's a trade relationship that we see deepening and broadening. The idea that inside 10 years we've gone from $1 trillion to the thick end of $2 trillion, I think that's the kind of environment that we're in. But it's not just trade. We see a broader set of economic relationships growing up as well around investment, two-way FDI. Chinese companies signed contracts worth $80 billion in Saudi Arabia alone last year. And then there's these strong personal relations as well, whether it's tourism or the big inflow of Indians into Dubai, for example. Yeah. So, my knee-jerk reaction when you talk about Middle East trade with Asia, I just think of China importing oil because essentially Asia is the Middle East's largest market. And you look at all the language coming out of China now, they just had the plenum, and the focus has been on driving a greener, cleaner transition, moving away from old industries towards new industries. And I wonder what that actually means for the Middle East oil exports. If China is transitioning and moving towards renewables, isn't that actually a negative? Will that have a negative impact on some of these corridors? If you look at that $1 trillion in bilateral trade, about 3/4 of it is Middle East exports to Asia. About 75–80% of that is directly hydrocarbons, oil
and LNG. The rest is non-oil. But what I'm seeing as the Middle East economies grow and diversify is a growing appetite for the goods that get produced here across much of Asia. But it's happening the other way as well, because the Gulf is growing so quickly, because its economic needs are broadening in the way in which they are. There's a natural pull for the goods that Asia leads on, everything from renewables up to tech, into this part of the world.
So we were just listening to former President Trump's speech. And again, this is a consistent theme. It is one of America first. It is protectionism. And it really feels like in just the last decade or so, this concept of geo-economic fragmentation has come to the fore. People are less excited about globalization. Countries are putting up barriers. Can an economic corridor still survive in this environment?
No, we'll see. I think there's a natural gravitational pull between these two parts of the world. Asia and the Middle East are growing quickly. There's a natural symbiosis between their economies and their economic needs. I can see that trade relationship growing already. It's not just about trade, and those investment flows are very strong as well, and those people flows, whether it's tourism or the big inflow of South Asians into the UAE in particular, I think that continues.
Yeah, and what about the emergence of India? Very strong growth numbers there, the demographics favourable, obviously positive from a tourism perspective as well. To what degree do you think that India is also going to be driving some of the economic activity between this region?
Absolutely. It's a broad relationship between the Gulf in particular and much of Asia. I think there's something quite striking about the ties between Saudi Arabia and China, but also something very special about the relationship between the UAE in particular and India. You know, it's a long and deep relationship, very strong family ties and personal ties and trade ties. But there's also a big connection, I think, between the tech sector in India and what it produces and the needs of the Gulf, the Gulf's capacity to provide capital support that tech development.
Yeah. Well, fascinating report. I'm not going to let you go before asking you about some of the central bank decisions that we had yesterday. Not ECB, we've spoken about that, but South African Reserve Bank didn't cut interest rates. I think there were a few banks out there who thought that maybe it would have been the right timing to start thinking about cutting interest rates because the rand has been an outperforming currency, because we have some political stability now. What do you see as the path forward for South Africa?
We weren't one of those banks. We thought the SARB would be on hold yesterday, and it was. But if you look through the details of some of the SARB communication, I think there's enough in there to shift in the inflation forecast. In fact, there was a split decision from the SARB for us to bring forward our timing for the first cut. So we've now got the SARB cutting in September. Previously, we thought they'd wait until Q4, but we're still looking for a pretty shallow easing cycle. So only 75 bips over the course of the cycle. 25 bips in September, another 50 over the first half of next year.
And because of that, they stand out versus other African central banks, because they actually can get on with the cutting cycle.
They can move forward with the cutting cycle. I mean, if you look at where inflation has been over the last year or so, one of the few major emerging markets to actually have inflation within its target range.
Yeah, that's an achievement indeed in this environment. Simon, thank you so much for joining me today. Simon Williams, CEEMEA Chief Economist at HSBC. Thank you. Well, speaking of investment in the region, the Trump Organization is planning to launch a luxury tower in Dubai in partnership with a Saudi builder. Tadar Global will build Trump Tower Dubai, including a luxury hotel and branded residences. The Dubai project is the third collaboration between the two companies in just the past few months. The location and design of the tower will be unveiled later this year. And coming up, South Africa's president and his new multi-party coalition are promising to focus on economic growth. We will discuss Cyril Ramaphosa's first major policy speech next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. South African President Cyril Ramaphosa says his new multi-party coalition government will prioritize economic growth. In his first major policy speech since elections in May stripped his ANC party of its majority, Ramaphosa announced a massive infrastructure investment plan.
We will pursue a smart industrial policy that focuses on the competitiveness of our economy and that incentivizes businesses to expand our exports and to create jobs. We will continue to work with stakeholders to develop and implement master plans to grow important industries, to increase investment, to create jobs and foster transformation.
For more on this, Bloomberg's Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Jen, he talks about this master plan to get the economy going again. First of all, what did we learn from this speech, and what has the reaction been from investors so far?
Well, Jumana, considering this was the other big speech that we were paying attention to, and I think if you just take a look at, that was just a clip of what one part of what the president was saying. It was really largely a market-friendly speech. He was enjoying himself. He was energetic, clearly enthused, used a lot of the time during his speech to talk about the importance of this new coalition government, but of course, really doubling down on this market-friendly approach, talking about the importance of growth, infrastructure, development, and also stabilizing the budget. Also potentially something welcome for investors is this idea of cutting back on the red tape that has really just slowed down any sort of development or acceleration in this economy's growth. And, you know, also speaking to everyday South Africans who have been dealing with higher food and fuel prices and also unemployment north of 33%. So, yes, there were a lot of positive signals that the president gave during this speech. Investors did want to see some sort of coalition government working together, and it seemed like that was the direction and the tone that he was giving last night. The big test, though, will be whether or not we actually see that play out. But right now, it's seeming like it's a relatively positive response.
Yeah, so that's the government side of things. From the central bank side of things, we also had an interest rate decision from SARB yesterday. We spoke about that now with Simon Williams. They didn't cut interest rates, but it seems like they're also laying the groundwork to start cutting. So what indications did we get?
Right. And Jumana, what's interesting about this is it was largely expected that the SARB was going to remain steady. But yes, as you were talking to your guest about, the SARB is saying that potentially we are moving in the right direction, which then opens the door potentially again to an interest rate cut in September. The big caveat here, though, is that the September South African MPC meeting overlaps with the Fed meeting. It is just a day before. So many economists are split on whether or not the SARB will actually move before the Fed. And we've heard the governor, Kanyako, say that the central bank does not follow what the Fed does. But if you take a look at the indications that you were speaking with your guest about, and also what we're seeing from the data, we could potentially see that be the direction that the central bank is moving in September.
Yeah, it seems that September is going to be busy for all central banks. Bloomberg's Africa correspondent Jennifer Zabazaja, thank you. All right, that's it for our show. Just going to leave you with a quick look at markets as we hand over to Daybreak Europe as markets digest President Trump's speech at the RNC.